Ladies and gentlemen, I would also like to extend a very cordial welcome to you to today's annual Media and Investor Conference in Berlin. As Professor Winzer-Kohn has already said, thanks to a solid business performance, Volkswagen had a successful year 2014, despite the economic and political adversities and challenges. We sold 10.14 million vehicles worldwide, exceeding the records we set in 2013, and were able to meet our customers' expectation in spite of the continuing market difficulties. This positive development can also be seen in our financials. The Volkswagen Group continued its success story, maintained its market position, and increased its profitability. In the fiscal year 2014, Volkswagen set new records for sales revenues and operating profits. Sales revenue in the reporting period was up 2.8% year-on-year to 202.5 billion euros. This despite of the fact that we had exchange rate fluctuations which negatively impacted sales revenue by 3.4 billion euros, particularly in the first half of the year. Operating profit was up 1 billion euros year-on-year to 12.7 billion, a new record figure. The return on investment for the automotive division was 14.9% and was well above our minimum required rate of return of 9%. Another important key ratio in the Volkswagen Group is net liquidity in the automotive division. On account of the high level of net cash flow, it has a level of 17.6 billion euros, so this is a level which ensures the group's financial stability and flexibility. Moreover, in the past fiscal year, we strengthened our financial position by successfully placing a 3 billion euros hybrid note issuance and the increase in capital through issuing new preferred shares to the tune of 2 billion euros. With these capital measures, we partially refinanced the acquisition of outstanding Scania shares as announced. In view of the continued success story of the company, the Board of Management and Supervisory Board will propose to the annual general meeting an increase of the dividend payment by 20% to 4.40 euros per ordinary share and 4.86 euros per preferred share. This is 80 cents per share more than last year. The distribution ratio will increase to 21.2%, a further step towards our medium-term target of 30%. In the fiscal year 2014, we did not only show in operational terms that we are well aligned, we also have further developed our group strategically. On March 14, 2014, we made a voluntary tender offer to Scania's shareholders for all outstanding shares. We completed this offer in May, and as per the end of the year 2014, we held more than 99.5% of both the Scania's share capital and voting rights. We initiated a squeeze-out procedure for the Scania shares that were not tendered in the course of the offer, during which it was decided that all outstanding Scania shares would be transferred to Volkswagen AG. Since January 14, 2015, Volkswagen Aktiengesellschaft has been the legal owner of all Scania shares, both directly and indirectly. Together with Volkswagen Commercial Vehicles and the integration of Scania and MAN, we intend to develop a leading commercial vehicles group. Our success in recent years has put us in a strong market position. We are well aligned for the rather heterogeneous development of global automotive markets. We are aware of our strength and continue to expand them. This includes in particular our unique brand portfolio, our diverse model range with their innovative and environmentally drive concepts, our presence in all major markets in the world, and we have also a wide selection of financial services that we offer. It is our goal to offer all customers the products and innovations they need and hence sustainably strengthen our competitive position in the process. As a consequence, we will extend our customer focus across all sales levels and in customer service. However, Volkswagen is not immune to the highly divergent economic and social developments around the world. This environment requires of us an utmost level of flexibility and financial strength to ensure our long-term ability to invest in the future of the Volkswagen Group. However, we always have to exercise caution, since our strict cost and investment discipline and the continuous process improvement approach remain the core elements of our strategy 2018. As Professor Winterkorn will talk about this in greater detail presently. Future Tracks, therefore, has not only been launched as a forward-looking program, but also as an efficiency program to sustainably achieve our profitability goals and strategic objectives. Ladies and gentlemen, let me now give you a detailed overview of the past fiscal year. A look at the income statement reveals that we increased sales revenues by 5.5 billion euros year-on-year to 202.5 billion euros. Compared to the previous year, positive volume and mix effects and the exchange rate effects could be more than compensated for. Another positive effect resulted from the business volumes, which increased in the financial service division. Cost of sales rose by 2.8%. This reflects the increased business volume and upfront payments in new products and drive concepts. Gross profit at a level of 36.5 billion euros was 0.5 billion euros up compared to the previous year. Gross margin of sales remained almost unchanged at a level of 18%. Although the distribution expenses rose by 2.3% to 20.3 billion euros due to the increase in business, the ratio of distribution expenses to sales revenue remained unchanged. By contrast, at 6.8 billion euros, administrative expenses declined slightly year-on-year, both as an absolute figure and in proportion of sales revenue. So we generated operating profit of 12.7 billion euros, surpassing the record value of the previous year by 1 billion euro. The operating return on sales improved to 6.3%, reaching the upper end of the forecast range of 5.5% to 6.5%. The above-mentioned figures do not include the prorated operating profit of our Chinese joint ventures to the tune of 5.2 billion euros, which was up by 0.9 billion euros compared to the previous year. These companies are included using the equity method and are therefore reflected solely in the group's financial result. The financial result rose by 1.3 billion euros year-on-year to around 2.1 billion euros. Lower expenses from the measurement of derivative financial instruments at the reporting date contributed to the increase, as well as income from the equity accounted Chinese joint ventures, which was up on the high prior year figures. As a result, our profit before tax amounted to 14.8 billion euros. The return on sales before tax rose from 6.3% to 7.3%. Here again, we have taken a significant step towards our goal of generating a return on sales of 8% as set out in the strategy 2018. Income tax expense in the past fiscal year amounted to 3.7 billion euros. This corresponds to a tax rate of 25.2%. Overall, we generated a profit after tax of 11.1 billion euros in the fiscal year of 2014. This is an increase of more than 20% compared to the previous year. Allow me at this point to mention that on our Investor Relations Internet website, you will find all the key figures of the fourth quarter of the fiscal year 2014. Ladies and gentlemen, I would now like to give an outline and a detailed breakdown of the operating profit by brand and business field. Reduced sales figures and the declining South American markets and also a weaker demand in Russia due to the crisis and deteriorating exchange rates, particularly in the first half of the year, and higher upfront investments in new technologies had a negative effect on the operating profit of the Volkswagen passenger cars brand, which was down 415 million euros to 2.5 billion euros. The positive development in sales and earnings of our Chinese joint ventures are not included in these figures. The Audi brand's operating profit increased to 5.2 billion euros due to, in particular, high volumes and material cost savings. This was partially offset by upfront investments and new products and technologies, as well as the expansion of the international production network. The company delivered more than 1.7 million vehicles, setting a new record despite the challenging market conditions. The Škoda brand can look back on a very successful fiscal year 2014. The largest model rollout in the brand's history was successfully continued, with more than 1 million vehicles delivered to customers for the first time. Positive volume and mix effects and lower material costs led to an increase in the operating profit by 295 million euros to 817 million euros. The Seat brand continued its positive development, particularly in the European market, and was able to reduce its operating loss compared to the previous year by a further 25 million year-on-year to a level of 127 million euros. Positive influence was given by improvements in the mix volumes and material costs, but this was partially offset by increased development costs for new products. The Bentley brand set a new sales record and continued on its successful trajectory in 2014. The growth in volumes was partially offset by negative mix and exchange rate effects, with operating profit increasing slightly by 2 million to a level of 117 million euros. 2014 was a very successful year for the Porsche brand again. Particularly the launch of the 5th series, the Macan, greatly increased deliveries. The growth in sales figures was more than sufficient to offset expenditures for new technologies, comprehensive measures to reduce CO2 emissions, and the expansion of the plant in Leipzig. Operating profit rose by 139 million euros to 2.7 billion euros. Volkswagen Commercial Vehicle consolidated its position as a customer-related and customer-focused mobility service provider. Operating profit rose by 56 million euros to a level of 504 million euros. This was further supported by positive mix effects and lower material costs. The markets for trucks and buses were dominated by a difficult environment in the past fiscal year. In Western Europe, the introduction of the Euro 6 emission standard had an encumbering effect. In South America, poorer economic conditions led to a drop in demand. And in Russia, the political crisis had a negative impact. The Scania brand generated an operating profit of 955 million euros in this environment, remaining almost level year-on-year. The brand's performance was boosted by its broad expertise in consumption-optimized vehicles, its wide range of alternative drive systems, and the increased demand for services. The MAN brand's commercial vehicles business also clearly felt the effects of the ongoing difficult economic conditions and the political crisis. In the power engineering business area, which had recognized project-specific contingency reserve in the previous year, business volumes remained level year-on-year. The operating profit increased by 65 million to 385 million euros. Volkswagen Financial Services again generated record results in the fiscal year 2014. The performance was attributable to growth in existing markets, the continued international expansion, and the expanded product portfolio following the intergroup acquisition of MAN Finance International. This was partially offset by increased expenses for meeting regulatory requirements for banks and the continuing pressure on margins. Operating profit at Volkswagen Financial Services grew by 5.5% year-on-year to a level of 1.7 billion euros. Please note that the figures for the brands and divisions also include intergroup transactions, in particular intercompany profits. These are limited in the other category. In addition, this item contains the results of the Porsche Holding Salzburg and the depreciation and amortization of identifiable assets from purchase price allocations for Scania, Porsche Holding Salzburg, MAN, and Porsche.